Welcome, Stock Explorers listeners, to the deep dive. Really glad you could join us today. This is where we try to cut through all the noise, get right to the core of complex topics and do it quickly. Today, we are diving deep into, the really fascinating, maybe even audacious world of BIT Mining Ltd. That's NYSE, ticker BTCM. Our mission today, basically, is to unravel this company's recent, frankly, explosive strategic pivot. They're moving into the Solana ecosystem. We'll look at the big vision behind it, really scrutinize their current financials, maybe draw some comparisons to market parallels like BMNR, which got a lot of attention. And we'll pinpoint the crucial factors for anyone watching this. It feels like a pretty high-stakes play. We want to give you those essential nuggets, help you understand not just what happened, but why it matters and what to watch for. So let's dive in. Okay, so let's set the scene. This strategic metamorphosis, as you might call it, it was July 10th, 2025. BIT Mining, BTCM, they announced this plan. They want to establish a treasury up to $300 million in Solana, or SOL, tokens. And this wasn't just some run-of-the-mill press release.
The market, well, it reacted instantly. BTCM stocks surged over 150% in just one day. And the trading volume was just immense. It really made you sit up and take notice.
Yeah, it definitely did. And what's immediately striking is the sheer size of that number, $300 million. But it's absolutely critical to understand this isn't money they have.
Right.
The company was explicit. This plan hinges on raising capital, in phases, they said, based on market conditions and capital availability.
So it's an ambition and aspiration, not cash in the bank.
Exactly. It's a target.
Yeah.
And if you look at where they were starting from, well, it's quite modest. As of the end of last year, December 31st, 2024, they only reported about $9.6 million in total crypto assets.
Wow, okay. So that's like, what, 3% of the goal?
Roughly, yeah. Just about 2%. And their stated strategy for the SOL they do acquire is long-term holding, oat-ailing basically, positioning themselves as a way for investors to get Solana exposure.
But they said it's not just about HODling, right? They're planning to do more than just hold on to the SOL. They announced they intend to operate Solana validator nodes.
Mm-hmm.
The idea being they contribute to network security, which is, good for Solana. But also, crucially for them, generate stable on-chain staking rewards.
Mm-hmm.
Their CEO, Xianfeng Yang, he framed it as a bold step, moving into a dynamic and promising ecosystem.
Right. And if we, try to connect that to the bigger picture, validator operations, yes, they can offer a more stable revenue stream than, say, Bitcoin mining. But the company hasn't really given us any detailed financial breakdown, no expected yield figures, which suggests that, whatever revenue they get from validating, it's likely going to be dwarfed by the potential price swings of a $300 million SOL treasury, if they ever reach that.
So the validator part might be more about the story, the narrative.
It could be. More for narrative strength, perceived legitimacy, maybe, than immediate bottom line impact. And this raises, I think, a really important question. Is this genuinely a proactive step? Or is it maybe more of a reaction to some deeper issues they were facing?
That's a huge distinction, isn't it?
Mm-hmm.
Because it changes how you view the whole pivot. So from your perspective, what in the recent past points towards this being more of a reaction? Like, what was going on that made such a dramatic shift necessary right now?
Well, the rationale becomes, I think, much clearer when you look back just a bit. Late 2023, BIT Mining sold off its BTC.com mining pool. Now, this business, it generated massive revenue, over $593 million in 2022 alone. Huge number.
Oh, yeah.
But, and this is the key part, it was fundamentally unprofitable. It had a net operating loss of $2.6 million. And even more significantly, it carried an $11 million net liability in crypto, meaning their crypto debts were bigger than their crypto assets on the books for that unit.
Ouch. So even though they only sold it for $5 million cash.
Exactly. Because they got rid of that liability, the sale actually had a net positive impact of around $16 million to shareholders' equity. It was like shedding dead weight, a costly anchor.
Okay, that makes sense.
Yeah.
But hang on, around the same time they were shedding that, weren't they also expanding? Something about Ethiopia.
Yes, precisely. They were also pursuing this very capital-intensive physical expansion in Ethiopia. They bought a 35-megawatt data center, nearly 18,000 Bitcoin mining machines. Cost them about $2.265 million in cash, plus shares.
So they were trying to simplify in one area while doubling down on traditional mining in another. Seems complicated.
It does seem a bit contradictory. And here's where the core problem really crystallizes. Operational updates from early 2025, February and March, They showed their self-mining costs in Ethiopia. Well, they were alarmingly high.
How high?
First, $60,960 per Bitcoin, then $65,831 per Bitcoin the next month.
Whoa, that's way above where Bitcoin was trading then, right?
Significantly higher. It was just an unsustainable economic model. And that, I think, is the most compelling reason for this sudden Solana pivot. It wasn't just them being adaptive. It looks much more like an existential escape. Plan A, the mining, especially in Ethiopia, it was failing.
So the Ethiopian expansion was maybe a failed attempt to fix the mining economics with cheaper power.
Seems likely, but it didn't work. So the Solana strategy isn't just Plan B. It's a radical shift away from that whole model. It's almost like they tried patching a leak, realized the boat was sinking anyway, and decided to jump onto a completely different, much shinier ship.
Yeah, that image really lands. The simultaneous moves do raise questions about, well, the coherence of their long-term vision, doesn't it?
It certainly does.
Okay, so that context, the failing mining economics, it really highlights the desperation, maybe. And it brings us straight to, well, the elephant in the room. How on earth does a company in that position with limited resources plan to fund a $300 million vision? What does this mean for their balance sheet?
Right, and when you scrutinize that balance sheet, especially before this announcement sent the stock flying, the gap is just profound. BTCM was a microcap stock, market cap under $40 million. They had less than $12 million in combined cash and crypto assets.
So nowhere near $300 million.
Not even close. It's crystal clear. They cannot fund this plan with their existing resources. It's just not mathematically possible.
And it wasn't just the cash situation. Didn't they have some trouble with the NYSE listing requirements recently, too?
They did. That's important context. They were out of compliance back in June 2023. They managed to regain compliance in December 2024, but they also had to do a reverse stock split in 2023 just to get their share price back up.
Right, I remember that.
Yeah.
So they've been on somewhat shaky ground for a while.
Exactly. And this history is crucial because on January 7th, 2025, just weeks after getting back into compliance, shareholders approved a massive increase in authorized share capital, an extra 6.8 billion Class A ordinary shares they could potentially issue.
Wow.
Yeah.
Okay. That's laying the groundwork.
It certainly looks like it, a very clear preparatory step. And then fast forward to the July 10th press release about Solana. Buried in there, it explicitly says the release is hereby incorporated by reference into a pre-existing Form F3 registration statement.
Which is, for those of us not fluent in SEC filings.
Ah, right. Basically, it's a shelf registration. It lets a company register securities for sale in advance, and then they can sell them into the market over time, often quickly, when conditions look good.
So, connect the dots for us.
The conclusion seems pretty unavoidable. The Solana announcement wasn't just a strategic update about buying SOL. It was also, effectively, the marketing campaign for the huge capital raise they need to actually fund it.
A capital raise that would likely be
Yeah.
dilutive, meaning more shares outstanding.
Highly likely, yes. Substantial and dilutive. They essentially shifted their business model from mining crypto to managing their own stock price as a currency to raise capital.
That's a really stark way to put it. And maybe the most telling part of this whole story is how the market reacted. I mean, that surge was incredible. July 10th, parabolic 350% pre-market, hit $11, closed up over 154% at $6.25. And the volume, 160 million shares. Just astronomical compared to usual. What was driving that kind of frenzy?
Well, the main narrative, the story really fueling the speculation, was the direct comparison to another stock, Bitmine Immersion Technologies, BMNR.
Ugh, right. BMNR. That one went crazy, didn't it?
It surged nearly 3,000%. Also after announcing an Ethereum treasury strategy around the same time. So lots of traders were looking at the BMNR chart and thinking, okay, BTCM could do the same thing, pointing to it as a potential roadmap.
But are they really comfortable?
That's the crucial point. There are critical differences. BMNR's funding, their $250 million, it was secured, locked in via a private placement from credible firms.
Okay, that's huge. Whereas BTCM?
BTCM has only announced a plan to raise capital from the public markets. Very different situation. And, other companies provide useful context, too. Bid Digital, BTBT, they also pivoted to an Ethereum strategy. Their stock actually fell 15% initially.
Right. So these pivots aren't always a guaranteed ticket upwards.
Definitely not. It makes the BTCM price action feel, well, inherently more fragile because it's built on hope and comparison, not confirmed funding.
And you definitely see that fragility, that tension, reflected in social media sentiment. It seems really sharply divided. The bull case, They're laser focused on that BMNR comparison. They see BTCM as maybe a low float stock right before a multi-day run. You see these crazy price targets thrown around $20, $40, even higher sometimes. Talk of a short squeeze. High volume means institutions are buying.
Mm-hmm.
And they often use this net asset value model, trying to argue the company can use its inflated stock price to buy SOL in a way that actually increases the per-share value of the crypto they hold. Accretive dilution, they call it.
Right. That's the bull argument. But then conversely, you have the bear case.
Yeah.
And they are understandably raising very strong concerns about this unfunded plan, about the high probability of a very dilutive stock offering coming soon.
Their fear is more like a pump and dump.
Exactly. That early investors cash out on the hype, leaving later buyers holding the bag when the offering hits or the story fades. They argue the dilution needed to actually buy $300 million worth of SOL, or even a fraction of it, will be so severe the per-share value might never recover. It permanently damages the ownership stake for existing shareholders.
So the rally is fragile because it rests on a narrative, not necessarily fundamentals or secured cash.
Precisely. It's built on story, not substance at this stage.
Okay, so pulling all this together, what does it really mean for you, the listener, trying to get a handle on this? If we connect the dots, the pivot seems born out of necessity from failing mining economics. It's hugely ambitious, but right now kind of untethered from their financial reality. And it's being fueled by this highly speculative market narrative, possibly based on a flawed comparison.
Yeah, that sums it up well. In essence, what BIT mining represents now as an investment, it's basically a binary high-risk bet. There are several major risks you have to consider. Number one, the most critical, funding failure. If they can't raise significant capital, the whole plan just collapses catastrophically.
Okay.
Number two, massive shareholder dilution. This feels like the most probable outcome, frankly, given their balance sheet. It will significantly increase the shares outstanding, putting pressure on the stock price.
Makes sense.
Then there's execution risk. Let's be honest, this company has no demonstrated track record in managing a huge digital asset treasury or running large-scale validator operations. It's totally new territory for them.
Right. And you've got market risk, too, surely.
Absolutely. A market risk. This is a leveraged bet on the price of SOL, which is, notoriously volatile. And finally, maybe related to the BMNR comparison, narrative collapse. This stock is priced on hype right now. An offering announcement or just a shift in market sentiment away from this story could trigger a really rapid sell-off.
Wow. Okay. That's a sobering list of risks. But presumably, there's an upside. What are the potential catalysts that could actually make this work, validate that bull case?
There are potential catalysts, yes. First and foremost, successful capital raise. If they actually manage to pull in significant funding, especially if it comes from a credible institutional investor, that would massively de-risk the plan.
Great, that would be a game changer.
It would. Second, a strategic partnership. If they could partner with a major respected player in the Solana ecosystem, that would add a lot of credibility. Show they might actually be able to execute.
Makes sense. Build confidence.
Exactly. And third, the obvious one. SOL price appreciation. If Solana itself goes on a sustained bull run, the value of whatever treasury they do manage to build increases. That could potentially make even dilutive fundraising look accretive in hindsight.
Right. If the assets grow faster than the share count.
Precisely. So my overarching thesis here is this. BIT mining. It's not really a mining company anymore, not in terms of its investment profile. It has transformed into what we call a special situation investment. It's a high-risk venture. Its value depends entirely on this speculative sequence of events playing out just right. First, they have to successfully raise the money, likely through dilution. Second, deploy that capital effectively into SOL. Third, SOL's price itself needs to appreciate significantly.
It really does sound like a binary bet. Extreme
Yes.
potential outcomes, up or down.
Extremely binary. It's really only suitable, I'd say, for highly risk-tolerant speculative traders, people who really understand that deep divide between the exciting story and the current balance sheet reality.
Well, that was an absolutely incredible deep dive into BIT Mining's audacious Solana pivot. It's a truly fascinating case study. You see strategic transformation driven by necessity, highlighting that real razor's edge between, ambition and financial reality. It's a compelling narrative for sure. But as you've laid out so clearly, the path ahead is, well, it's filled with both huge opportunities and really considerable risks.
And maybe a final thought for listeners to chew on as they consider all this. How will the market ultimately balance the sheer excitement around a transformative vision like this with the fundamental challenge of actually financing it, likely through massive dilution? And maybe more broadly, what does this kind of explosive market reaction tell us about the sheer power of narrative, especially in these really volatile tech and crypto sectors?
Great questions to ponder. And if you found this deep dive as compelling and thought-provoking as we did, please make sure you subscribe to the deep dive. Give us a like if you enjoyed it, and definitely activate those notifications. That way, you won't miss our next deep dive into the critical and complex topics shaping our world. Until next time.